Hey, good morning. This is Meir Valensky with Driving Markets. Driving while talking about markets. Hope you're all well. Okay, so let's just catch up what happened last week. Just charging my phone. Before I say that, anything said in this piece is media production only. It's not investment advice, not financial advice. I'm not telling you what to do, how to sell, etc. Just an opinion. So if you trade, great, and you make money, great. If you lose money, that's not the idea. The idea is for you to make money. Remember, all the money belongs to you. It's your platform. It's your trading account, etc., etc. This just gives you a little bit of flavor. It's a bit wacky, a bit quirky. Let's move on. Okay, so Friday was the big non-farm payrolls. Now, I did actually produce a YouTube and a video just beforehand. Unfortunately, by the time I got internet, by the time I uploaded, came out after the non-farm payrolls. So apologies for that. I was a bit late in the day on Friday. However, let's just catch up what happened historically, where it's likely to go forward. So the number came out on Friday, 263,000. That means simply 263,000 new jobs were created in the US. The expected number was 200. Now, normally a better number than expected under normal economic circumstances would push the market up because it would show that the economy is strong or getting stronger. Initially, when the number came out, the markets tanked. The Dow, the S&P, the Nasdaq absolutely dropped, and the dollar went up. The dollar strengthened. Then during the day, there was a complete turnaround whereby at one stage during the negative cycle, the Dow was down like 500 points, and then it ended up closing up 34 points on the day. Now, why would that happen? Why would it that a number, in essence, worse than expected in financial markets, and the markets take it into their grasp and just move on? Because several factors. Number one, we're coming towards year end. In year end, there is a big push on getting the markets up to a higher level. The traders, investors, and bankers don't like finishing the year end on a negative note. So that's one underlying characteristic, and that generally is the trend overall with financial markets year on year. The other factor is that they're seeing this as an aberration. They're seeing this as a one-off. They're seeing this as it's okay, the economy is very strong, and therefore consumers are strong, and therefore employment is strong. Consumers are going to have money, and they're going to go out there and spend, which is another indication that the economy can absorb the interest rate rises. And if the economy can absorb the interest rate rises, then great. It means that they're onto a winner. It means the economy is going to continue growing, and corporate earnings are going to come in stronger than expected. And that's the reason behind the market going up on Friday. So with that in mind, and with that fact out there, then you can expect markets, equity markets I'm talking about, not foreign exchange, equity markets, to continue rising. And they're going to rise all the way through to year end. The question is, what's going to happen in January? January, the big Christmas effect, the happy holidays effect, all of that is worn off, and then the reality sets in. So let's look at a few realities, let's look at a few hard facts of what's likely to happen in January, okay, regarding equity markets. I'll discuss FX markets shortly. So as far as equity markets are concerned, there's all this excitement, feel-good factor. Everyone is going out to buy the stocks and buy the high techs and buy the shares, etc., and going to end up with a year-end strong portfolio. And all of that will give them a good solid feeling that they've become richer. And then come January, we're going to go back to the inflation, the high interest rates, and the geopolitical situation. Talking specifically about the geopolitical situation, Vladimir Putin is not going to withdraw from Ukraine without a solid victory. It's not going to happen, irrespective how many soldiers are killed on both sides. He either wants to decimate Ukraine's cities or get absolute control, that he can come back and go to his people and say, this is what the success was, we paid the price, and it was worth it. So anyone who's fooling themselves that Putin is going to withdraw from Ukraine without a victory, solid victory, it's not going to happen, okay? That is going to put further impact on the geopolitical instability. And there is also a geopolitical risk that the war could spread to surrounding countries. And in that 2023, that could well happen. Don't be fooled, because Vladimir Putin is very determined to get success on his side. Now, the Europeans and the G7 have put a cap on Russian oil. The price of Russian oil now, maximum can be paid amongst the G7 nations, is $60 a barrel. That is to put more pressure on Putin in order to enhance and strengthen the sanctions and put more pressure in order for him to pull back. He's not going to pull back. What he's going to do is going to close the gas pipeline to the West and freeze them into submission. He's not going to allow $60 a barrel price for Russian oil and everywhere else is going to be $80, $90 a barrel. It ain't going to happen, okay? It's simply not going to happen, and they're going to fail. The Europeans, the G7, they are weak. Vladimir Putin is very, very determined. He's very strong, and the West is weak, led by Biden, Kamala Harris, and the American Democratic government that is weak. Weakness. That's what they're demonstrating. That's what they are. Generating in terms of an overall view. Okay, projecting. That's the word I was looking for. That's what they're projecting. So Vladimir Putin is going to continue with the geopolitical situation. Okay, and that's going to put pressures on oil prices and also on commodities. If interest rates are not having the effect on the consumer, then what you could have is the cost of housing slightly rising next year, because if they can absorb the cost of the interest rate rises, then you could have housing going up next year. When I said actually it's going to go down. Overall property prices are expected to drop by 25-30% in 2023. That's over a 12-month period. I expect there to be that particular drop. Moving on to foreign exchange markets, the dollar weakened significantly on Friday against the majors, against the pound, the euro, and the yen. As I've stated many times on Instagram and on my YouTube Driving Markets, that I think now the dollar trend is down near term. That's over the next couple of weeks, okay? And I expect the pound to go to 125, 127. I expect dollar yen to go about 130 and the euro to go about 107. However, that will change in January. There'll be a complete change around, and the dollar would have hit its resistance level, support level, as long as it's support level, and then from there it will probably bounce up, putting other majors under pressure. So you're going to have the pound going to 125, 127, a big bull on the pound. I believe the pound is still well undervalued and really should be around about the 135 level when we're talking about cable. As far as euro is concerned, I've still got a target price in there for 95 to the dollar. I don't think it's going to go anywhere because Europe is in a pretty shocking state, and they're late on increasing interest rates, and they're definitely going into recession. Okay, as far as Japan's concerned, which is a major currency, there's no indication yet that they're going to increase interest rates. Other currencies, Aussie dollar strong against the dollar, and so is the Canadian dollar strong against the dollar. Moving on to cryptos, my favorite. Bitcoin is well overbought. It's just shouldn't be there at 17,000 and really needs to be dumped. I have a year-end target on Bitcoin at around about 15,000, well below 15,000. In fact, I want to be clear on that, well below 15,000. That's my take on Bitcoin. Okay, that's more or less it from Driving Markets. You can subscribe, you can share it with friends, enemies, colleagues, whoever you want. Speak to you tomorrow. Have a good day.